Hey traders, welcome back to this week's weekly Forex forecast. Last week was a really good week for Forex trading. We had tons of opportunities, tons of things were taken out, upper and lower bounds, and we started to see volatility coming back into the market, into Forex, because without volatility, there's no risk and there's no opportunity. So last week we had a ton of that. It was another winning week in the GMT members area, and it was a big winning week last week. So we're looking for that to continue this week. However, just bear in mind, coming into this week, we do have something unusual, which is that non-farm payrolls is coming up on the Thursday, not the Friday. Why is that? Because it's July 4th, Independence Day on the Friday. So we do have a 4-day trading week next week, ending with non-farm payrolls on the Thursday. So kicking off then with the Forex markets, euro dollar, we're looking at this. This is something I really like going into next week for long opportunities. Now, what's interesting is I've put this trend line on here and the secondary trend line because euro dollar is channeling. It's known as channeling. And what you will see is that the opportunity I'm particularly interested in next week, which is below the 1.5710, is also an area of confluence with this kind of second trend line. Now, interestingly, if I take the current trend line and I channel this from the first point, you can see we're currently sitting at the top of it. And if I do the same with the second, you can see we're right there. So going into next week, I can only be a buyer of euro dollar or do nothing. As we go through the portfolio selection, you will see I am once again interested in US dollar shorts. Last week, I was looking for long opportunities. And what happened was on the Tuesday, we got a ceasefire announcement, the dollar tanked, oil tanked. And then late on Friday, we got some more tariff announcements. So we are in a period where we're seeing a lot of unexpected catalysts. That means, news events that are coming out or statements being made, which are not in the economic calendar, and it's shaking markets around. So it's causing volatility. It can be a little bit tricky here and there at times, but it is also providing a lot of opportunity. So what I like to see next week is I'd like to see euro dollar coming down because this market is a little bit overextended. We're right at the top of the channel. I'd like to see this come down, trading below the 1.15710. This is where we enter the buy zone because we turn oversold during the week in a market I'm looking to be long. And you can see as we enter this, we'd be trading right into this kind of secondary channel. And this is where I'm going to be looking for a 1 or 2 day reversal to the upside next week. Intra-week breakouts from here, I would probably leave them because this does need to pause, does need to correct, and we are sitting right at the top of the channel. And every time this is pushing into this channel, it's pulling back, pushing in, pushing back. So this is the area right here that I want to be looking for a long opportunity next week in euro dollar. As a second option, if we trade below the 1.1436, which is this level here, so it's the bigger range, this is where we turn extremely oversold below this during the week. So this is the second place. I can pull the trigger on a 1 or 2 day reversal to the upside if I so wish, but it's really a backup plan. We're not expecting these levels to be taken out unless there's a significant catalyst. Without a significant catalyst, it's unlikely that these levels will be taken out. So right there below the 1.15710 next week is where I'm going to be personally looking for buying opportunities in euro dollar. I cannot sell this market next week under any circumstances. Okay, so moving on to portfolio selection and starting with the top long themes, pretty straightforward. I'm looking to be long the euro still, looking to be long the Swiss franc, and once again, the pound. So those three to the upside are pretty clear, and the overall regime is also quite clear, right? We're seeing this kind of allocation into EU major currencies as the US dollar sells off, but also as we're getting disinflation. So the money is preferring to go into the EU majors than the commodity currencies because, commodity currencies tend to suffer, or they tend to at least face headwinds when you've got disinflation. When you've got inflation, of course, the commodity currencies tend to outperform. So you'll also see that the euro and the Swiss franc are both overbought on a rolling daily basis. This is why I was warning about those kind of intra-week trades in euro dollar, which we looked at. Not only is it at the top of that channel, but the euro is also overbought on a rolling daily basis. And when that happens, it has to pause and correct. So, you're essentially buying euro dollar if you try and buy it kind of intra-week at a point where it's already extended, like an elastic band. It's already extended. You may be able to stretch it a bit further, but the odds are that it's going to snap back in your face. So that's why I prefer to look for that dip opportunity in the euro versus the dollar next week. Now to the downside, the US dollar we started to see a little bit of strength coming into it, and it just basically tanked on the ceasefire agreement. So if you remember from last week's video, and this is kind of what I was talking about before, those moving parts, this kind of plethora of unexpected catalysts just coming out. Something happens and then it changes, and then something else is said and it changes. And we had that kind of escalating conflict. Oil went up, the dollar went up with it, and then we get the ceasefire, oil collapses, the dollar sells off. So again, in the midweek, you know, you have to kind of be reactive to these things as they come out. So I am looking now for US dollar shorts once again, primarily against the euro, the franc, and the pound. Alongside that, also the Japanese yen. So, you know, with the kind of ceasefire agreement, you know, we are probably clear to short the yen next week because, you know, the risk of a kind of flight to safety in stocks has diminished, right, with the Iran-Israel ceasefire. And with tariffs, you know, unlikely anything to happen with them next week, apart from specifically Canada, which we'll talk about. So I do like the Japanese yen for shorts. I was holding off shorting the yen because of what was happening between Iran and Israel. But if there's a ceasefire and, you know, stocks are not going to sell off on a flight to safety, then the Japanese yen as a short is back on the table, because if stocks start to sell off and you short the yen is going to rip in our face. So that's why I've been kind of off that as a short recently. And the third thing is the Canadian dollar. Now, this is also good because, yes, we've got disinflation. We now have crude oil collapsing, which is the complete opposite to how we went into last week. And that's going to be, you know, putting downward pressure on the Canadian dollar. And on top of that, we've also just seen late at the end of the week yesterday, Trump announcing new tariffs are going to be put on Canada because of the digital tax on services, I think it was, that Canada is looking to implement on the US. So that's going to have a negative effect on the CAD going into next week as well. So all in all, I would say, you know, the outlook here is pretty clear for the currencies I want to be long and short. So I'm going to be looking at euro dollar to the upside, euro yen to the upside, euro CAD to the upside. We're also in this video going to look at US dollar franc to the downside, franc yen to the upside, CAD franc to the downside. And we're also going to be looking at pound dollar to the upside, pound yen to the upside, and pound CAD to the upside next week. Okay, so kicking off the watch list then with crude oil, as we always do. Now, I went into last week looking for long opportunities only in crude oil. Why? Because we had the escalating Iran-Israel situation. And if you remember, we pulled back. We tested the lower bound right here. It was a really good buying opportunity the previous week. We push up, and then immediately, or almost immediately, as we start the week, we get the ceasefire agreement. And what happens? Crude oil collapses, goes all the way down to its second lower bound. So again, this is where you have to look at the news and understand what's going on, because if you're looking for long opportunities in crude oil on the basis of escalating Iran-Israel tensions and a ceasefire takes place, clearly that invalidates the thesis. You're not going to step in, you know, and buy from the lower bound, right? It just collapses straight through. You drop down to lower time frames. Where are the double bottoms or inverse head and shoulders? You know, they don't appear. It just goes straight down. Then when you get to the second one, maybe you could step in, you know, because at that point we're extremely oversold and you would have got a bit of a bounce there. But the fact this only moved sideways after trading into the lower bound suggests there's a lot of downward pressure, and it looks like this probably will continue next week. Now, with this situation, of course, you have the same risk shorting crude oil as buying crude oil last week, right? You know, you could see this pull back. We could breach the 68.79, which is where I'm going to be preferably looking for potential shorts. And you may have, you know, all it takes is someone to fire a rocket and suddenly, you know, the war is back on and crude oil rips higher. So if you are trading crude oil, you have to understand there's an ongoing situation. Is the ceasefire, you know, going to settle it, or is it going to reignite? Because if it does, this is something you have to bear in mind, you know, if you are looking for shorts. However, so I think there are actually better opportunities, having seen this go up and then immediately straight down on a ceasefire, which, you know, is arguably potentially shaky. But if you are looking to trade crude oil, my preference would be for short opportunities. So looking for it to trade above the 68.79 next week and looking for those double tops, head and shoulder reversals. The other thing is, again, because of the volatility in this, there's no real, you know, we go into the sell zone and there's no real key area of resistance over here that can help time any kind of reversals. So all in all, this would have to start making its own key area of resistance or reversal patterns, making a high, testing that key area of resistance, and then failing at its own resistance essentially. So that's what I'll be looking at in crude oil next week, but just bear in mind, this is a very volatile market. Above the 72.51 is where we turn extremely overbought during the week if we get there. It is a second place I would look for a potential short. And again, maybe you get the ceasefire ends like last week. It goes straight through the first lower bound and then it stops at the second one. Maybe that kind of opportunity. Otherwise, just be very careful trading crude oil next week. But above the 68.79 is where we turn overbought and where I would, on balance, as long as the ceasefire is holding, although it does come with risks, I would be looking for potential shorts for a 1 or 2 day reversal back inside the range. Moving on then to the rest of the euro pairs, starting with euro yen. Now, euro yen is in a nice uptrend and it's starting to actually pick up steam. If you take this channel and put it here, it's actually surfing the top of the channel. But what I'd like to see is I'd like to see this break back down, ideally to come back and stair step the prior high over here roughly at the 167.61, because this is where not only do we trade into prior broken resistance, see it attempts there, breaks, pulls back, and then bounces. But we also trade into the buy zone. So not only would we be stair stepping the prior high here, we would be below the 167.71, and that puts the odds of reversal in our favor. So this is where I'm going to be looking next week for a 1 or 2 day reversal to the upside. If we were to end up all the way down below the 165.91, that is where we become extremely oversold during the week. So it is the second place I can pull the trigger on a long position. Alternatively, you start to pull back. You can look for that intra-week breakout where you re-break above the moving average and you pull back in and you hug it. You break above, you kind of pull back in, hug it, and move away. Break above it, hug it, move away. And it may even just be sideways. You break above it like this, and it goes sideways, doesn't test it, but then you start the next leg up. That's your bull flag setup. Usually you only get one of those in a week if it does come in the 4-hour time frame. Your bull flag setup into the 171.31. Great profit taking target to the upside next week in euro yen. And the third euro pair I like heading into next week the most is EurCad. Now, EurCad did have that spike to the upside at the end of last week. Why? Because we saw Trump talking about the tariffs coming in on Canada. I would personally like to see this wash out, and my preference is for this to come down below the 1.5877. This is where we enter the buy zone next week. This is where I begin to look. And we have a nice support here and a prior resistance just here. So in this zone between the 158.73 and the 158.44, this is where I'm going to be looking primarily next week. Either if it starts to reverse from here or down here, I'm going to be looking for that 1 or 2 day reversal back inside the range. If we end up below the 157.25, something rather unexpected has happened for that to take place during the week, but it is where we turn extremely oversold. So I can pull the trigger on a long position, whether I'm long already or not. And the third thing, of course, you can look for is the pull back into this area. It doesn't take out the lower bound, and instead it breaks back above, pulls back into the moving average, and then pulls away. That is the bull flag setup to the upside. Great profit taking target next week is the 1.61816 in EurCad. Okay, so moving on to the US dollar pair, starting with US dollar franc, and you can see also we have some nice confluence in this area. And really this is what I'm looking at here. I'm trying to find where the confluence is. Where do these markets become overbought and oversold? Where are they then trading into support and resistance, or trend lines? And then this is where we get those increased odds of a reversal, especially when we do all of this in line with our portfolio selection. So, the strongest versus the weakest. So what I'd like to see next week in US dollar Swiss franc is for US dollar Swiss franc to pull back. And once we trade above the 0.8081, this is where we enter the sell zone between these two levels. And so just on its own, without anything else, the odds of reversal increase greatly. But we also trade into the prior resistance just here. And you can see we have this kind of trend line coming down as well, connected to these two anchor points here for this kind of area. It's got almost this kind of descending triangle pattern here in terms of the trend lines or the horizontal line. But this is where I'm going to be looking. So I want to see the market pull back, attempt a breakout of the 0.80820, which is this high, maybe even push all the way through into the top of the channel. And this is the area I'm going to be looking for US dollar Swiss franc to fail back inside the channel and also back inside the range for a 1 or 2 day reversal. You can also look, if it attempts to come back, fails to turn overbought during the week and then re-breaks, you can look for that bear flag setup. In this case, you can see this as well, down to not just the profit taking zone at the 0.78862, but also the bottom of the channel down here as well. But this is my preference for next week. This is the primary setup I'm going to be looking at in real time with GMT members. And as always, if we end up unexpectedly above the 0.81780, this is where we're extremely overbought during the week, probably because some unexpected catalyst came out, and I would be looking potentially for a short position from above there as well. And that would most likely set up the kind of pullback, you know, to the broken channel and then the next leg up. Next up is franc yen. Now, I know I said we'll go through the dollar pairs, but we've already looked at euro dollar, so we're actually going to go through the franc pairs here instead. So franc yen is also at the top of my list for a long position. I can only be a buyer of this market or do nothing. I cannot sell it. So what I want to see is I want to see the opposite primarily take place. If this is trending up and I want to buy it, I want to see, you know, sellers pushing this down into a point where the odds of it continuing any lower are greatly diminished. And next week, that would be below the 179.22. This is where we turn oversold during the week. This is where we get to start to look to buy the dip. And preferably, if we could come down and take out the 178.62, this would be a really nice place to look for sellers to get trapped, looking for that 1 or 2 day reversal back inside the range. Again, it's a very strong market, so you may find it comes down and just re-breaks. If you get this kind of price action, that does set up a potential bull flag into the 182.89 great profit taking target in franc yen next week. And the final franc pair is CAD franc. Now look at this prior head and shoulders breakdown in CAD franc. We kind of tested it, buyers attempted to rally it, failed, and we got the momentum break lower. So this could potentially be a third wave to the downside now, because when you get these head and shoulders breakouts, usually or very often it kickstarts a third wave, especially if you have a catalyst. And right at the end of the week, we did get a second catalyst for CAD weakness. First one was the ceasefire, which collapsed crude oil. And then we saw the tariffs going in at the end of the week on Canada, or at least the announcements that tariffs would be implemented. So I do think this is a fantastic opportunity for next week. What I want to see is I want to see CAD franc pull back, because, you know, even markets we're looking to be short, they don't move in a straight line. Okay, a market like this will do this. So we're looking at selling the rip essentially in this case. So I want to see CAD franc pull back. I want to see a market which I'm looking to be short showing some strength, and above the 0.5897 is where we enter the sell zone, and right above that we have the head and shoulders breakout level. So I'd love to see this come back, confirm or test the breakout point of the confirmed head and shoulders pattern, and this is the area next week I'm going to be looking for a 1 or 2 day reversal. Now, if it pulls back and bounces and rejects from there, it could actually very easily not just come back down to the prior low, but see a much bigger sell-off, because, you know, when you have these major pattern breakouts, they retest, and then that's the kind of area where these things can really start to motor, you know, to the downside in this case. But I will personally be looking for just a 1 or 2 day opportunity as a short-term trader. If we end up above the 0.5963, very unlikely, but that's where we turn extremely overbought during the week. I can look for a short position over there as well. And perhaps we just attempt to pull back. We break above the moving average, so we know when it does that, that we've had a correction, and we're not just in the same kind of trend all the way down. You know, from here to here essentially is one move. From here to here is essentially one move, right? So we break above it, you know we've had a correction, then you can look for that re-break. Pull back, bear flag opportunity potentially if it materializes into the 0.5765. So I can either be short CAD franc next week or do nothing. Buying this market is not an option for me. Okay, so finishing off the Forex universe with the pound pairs before moving on to gold and silver. You can see pound dollar, we had this big kind of double bottom. We broke out with momentum, and it is essentially forming a bit of a first wave because there's no pullback. You know, this is all part of one move. You can't put a trend line from here to here, because, well, you can, but this is essentially a trend on, you know, a 5-minute or 15-minute time frame. So it looks like this needs to pull back, needs to correct. And now we've finally broken out of the prior high, this kind of range high. See, we attempted and failed. I am looking for a potential pullback, retest. This would be my preferred area. I'd like to see it initially push through the top of the range at the 1.35929 and breach the 1.35779. That's where we enter the buy zone next week. This is where I'll be looking to buy the dip, looking for it to fail below that level, looking for that 1 or 2 day reversal. If we do pull back, maybe we test here, and instead of turning oversold during the week, we just re-break. Maybe that is a good candidate for that kind of bull flag setup where it doesn't pull all the way back down towards the lower bound or breach the lower bound. So you're essentially trading a continuation as opposed to a dip trade, right? It comes down, turns oversold, you can buy the dip. But if it comes down, fails to turn oversold and just continues, it's that kind of intra-week continuation. And the extremely oversold level next week is the 1.34329. If we do end up below here, I don't think it's going to happen. Very, very unlikely, but that would be the second place I could look for a potential 1 or 2 day reversal to the upside in pound dollar. Next is pound yen. Now, I can only be a buyer or do nothing. I cannot sell this market next week. And you can see a prior historical broken resistance, potentially turning support area, is setting up right on the lower bound at the buy zone. That's this high over here. So we pull up, we attempt to break it, fail multiple times. Now we finally broke through. So going into this week, I can only be a buyer. I would like to see this come all the way down, breach the 195.98 and enter the buy zone. This is where I'm going to begin to look for sellers to fail. And I'm going to be looking for that 1 or 2 day reversal. If we break down below the moving average and we start to make our way towards it, and instead of testing it, you get the re-breaks, you get a strong market. That's where you can look for that potential bull flag setup, that intra-week continuation into the profit taking target, the 200.93. And the extremely oversold level is down at the 193.41. Again, I don't expect the market to come down to here. You would need an extremely bearish catalyst for the pound for this to take place, or an extremely bullish catalyst for the yen. But if we do trade below the 193.41, I can pull the trigger on a long position if I so wish. And finally, we have pound CAD. Now, again, you can see we kind of attempted to break above this significant high previously. And we were holding here, and then it failed. And look at what happened when it failed. All of these buyers pulled their long positions and stop losses were triggered. And look at that momentum sell-off. That is an example of a market which has a failed breakout, and you get that payoff. You get that liquidation to the downside. So what I'll be looking for is the same thing, but this time to the upside. So I want to see, instead of buyers trying to break through here, I want to see sellers attempting to push pound CAD back down below the 186.012. And it may even push through for a bit, right? It may start to test the underside like this. And when those sellers pull their positions and stop losses get taken out, you get that momentum to the upside, that liquidation. And it tends to be very often, if you get, a real liquidation or short covering, can be a very fast payout. This can happen within a day, or so. So that's what I'm primarily going to be looking for next week in real time with GMT members. If we pull all the way back down and we fail to take out this key area of support, and we just start to re-break, and this just becomes a kind of bigger bull flag for a continuation, you can look for the moving average to follow it, and that potential bull flag set up that continuation into the 18929. And in this case, the 1.84436 is the extremely oversold level. So I could buy it here, and if it comes all the way down here, I can, if I wish, buy it again. But, is that going to happen in pound CAD? If anything, it's most likely going to take out this level over and above this level because of the double bearish catalyst that we've seen out of the Canadian dollar. So, it's still unlikely to take this level out, but it's certainly more likely to take this level out, in my opinion, than this level. So those are the primary setups I'm going to be looking for in pound CAD next week. I can only be a buyer of this market next week. Okay, so wrapping up the video with gold and silver. Now, I've been a buyer of gold for quite a while. In fact, I bought it again last week. This was a setup that sent out last week to members. It came down, and I bought gold somewhere around here. I can't remember exactly where, but I bought it for this bounce. And it started to pull back. And the reason I bought it was because it traded below its weekly lower bound. And at the same time, we had the dollar selling off because of the ceasefire agreement and everything else. Crude oil was coming down, etc. So I stepped in to buy gold, and it did bounce, but it came to about here, and I could see that this was corrective. And even though the dollar was kind of weak, gold wasn't rallying, and that is a big warning sign. When the dollar is weak, gold tends to outperform. So we started to actually see, weakness in gold despite the fact we had a weaker dollar. That's a big warning sign. So I booked my profits a little bit early on this, but it was a decent trade, but normally I would have held this a little bit longer. But this week I prefer to look for shorts in gold. Now, a couple of things here, shorting gold overall over the long term is not a fantastic strategy anyway, but I'm talking about short term, 1 to 2 days I'll be looking at. And on top of that, shorting gold with a weaker dollar, is also not great. But going into next week, when you've got a weak dollar and gold is selling off, this is really not a strong market to be buying. So if you don't like selling gold, I understand that. You don't have to sell gold. But on balance, if you are, someone who trades gold long and short, I would favor short positions in gold next week because of everything we just discussed. So I would like to see gold come back, enter the sell zone, and I would like to see it trade above the 330.50.25, which is this high. And this is where I'll be looking for buyers to get trapped, pull their positions for a 1 or 2 day liquidation to the downside. If we end up above the 341276, which probably only happens if we get a re-escalation of the Iran-Israel situation, this would be a good high to time any kind of failed breakout from. And the third thing is, you can look for the intra-week breakout, but the dollar's not that strong. I mean, I would really only prefer to trade gold to the short side next week if we turn overbought. So that's my preference for gold heading into next week. And last but not least, we have silver. Now, silver is stuck in this range. And actually, when we look at this quantitatively, it's not too surprising. Why? We're coming towards the end of the month. And if I turn the monthly levels on, you can see we've already taken out our monthly level. And this is why silver is struggling this month to go any higher. Quantitatively, it's being capped. So coming into this week, I do still favor long positions because of the weakness we're seeing in the US dollar. So what I would like to see is I'd like to see this pull back first. Again, I would probably leave the intra-week stuff because yes, the dollar's weak, but we're kind of at that upper monthly bound. And very often when you test the monthly upper bound, it comes back down, test the weekly lower bound in the other direction. Very often, we're just talking probabilities. So I would like to see it come down, take out the lower bound, and you can see there's 2 prior key areas of support in the 4 hours here. These are places price came down in the past and then rallied. Came down in the past and then rallied. So between the 33.95 and the 34.19, this is where I'm going to be looking for sellers to get trapped in the buy zone next week. I'm going to be looking for that 1 or 2 day liquidation to the upside. If we trade below the 32.508, that is where we turn extremely oversold. I don't see that happening because the dollar is, quite weak. Silver's a pretty strong market still. So I don't see this happening. You'd have to have some kind of real risk off catalyst. But the 32.50 is the second place I can pull the trigger on along if I so wish. But this is the primary setup I'm going to be looking at in real time with GMT members next week if we can get silver trading down into the buy zone. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge- platform is included with every GMT membership.